Morning and welcome to today's edition of Toggle's Daily Video Insights. Happy Friday. For many of you who have previously been with us, welcome back. And for those who are new, you can subscribe to our YouTube channel, and we do these reviews of various insights Toggle produces across a number of US stocks every trading morning. Today we're going to take a look at Tesla. As you can see here, actually, Toggle has highlighted on a couple of occasions, and so far incorrectly, that there is some upside pressure for Tesla, particularly emanating from the fact that the technicals have started to line up positively. A recent sell-off, in part driven by rising rates, has overcome all of this. But at the moment, it's now highlighting that actually the entry point, this is the latest signal that was just produced last night, that the entry point could potentially be compelling, because previously when you've had a sell-off quite this significant, the stock had typically bounced. So if we click on this right here, we're able to take a look at the actual analysis that the system has produced. And as you can see, it's analyzed 15 similar occasions where the stock has had a sell-off like this. Maybe a word explaining what we mean by an unexpected sell-off. Effectively, the system is constantly monitoring moves for every asset over a week, a month, and so on, and comparing that to what the expected range would have been before the move, which we proxy by looking at volatility. And so as soon as it detects that there has been a 1 or 2 standard deviation move up or down, the system then goes back and inspects whether or not historically this is a big enough move in one direction or another to have a consistent pattern of bounce or correction in the aftermath. And in particular, in this case, it's found that the median rise in the following 3 months after a sell-off like this is potentially as high as 30%. Of course, this is a very volatile stock, and so you get a move that's a little bit larger than what you typically see. Understandably, also a very, very large confidence interval, because of the episodes that have been studied a lot of them belong into the recent range where this stock really was quite a wild mover. Now, looking at why it might move, you can actually see all of the past episodes when this has happened, and see right down here it signifies these other big moves when the stock had really moved down much more violently than what would have been suggested by its prior volatility. And that typically, although here you really need to squint to see it, typically this coincided with a very, very meaningful bounce back. And so this is what the system is looking at this time. Looking at the quality checklist, you see that actually it got 7 out of 8 stars. In particular, the only reason why it hasn't gotten 8 is that this hasn't happened through a variety of different business cycles. Obviously, most of the action in Tesla has been a relatively recent origin. Finally, looking at the back test, you can also see that the risk reward is quite compelling, because the downside is really, really minimal compared to the upside, at least it was in these prior episodes. So it's certainly a situation that's worth taking a look, see whether or not this is a stock that agrees with your fundamental views. And if it does, this may not be a bad time to take a look to see if this is maybe a point to add. So much for Tesla today. We, in the daily brief, which should be in your mailboxes already if you're signed up to it. If not, go check out toggle.global and you can subscribe. We also discuss whether or not yesterday Powell's statement implies that the Powell put has been removed, or if the Fed is ultimately still going to come in and tame the interest rate market. Thanks for your attention, and we'll see you again on Monday.